Big news traders. The US has just imposed fresh tariffs on Canada and Mexico. But what does this mean for the Forex market? Will USD CAD and USD Mexico skyrocket or crash? Well, in this video, we'll break it down. Why these tariffs were imposed, how they impact USD, CAD and MXN, live technical analysis of key trading levels, the best trading strategy to profit from this move. So, if you trade Forex and want to stay ahead of the game, watch to the end. Let's dive in. News headlines. President Trump imposes 25% on Canada and Mexico and 10% tariffs on China. Trump tariff, what they mean for business. Understanding the impact of Trump's tariff on the US dollar. How will US dollar respond to a trade war 2.0? The economic impact of US tariffs. This is a chart of USD Canada pair before and after announcement, and also this is a USD Mexico chart before and after announcement. And hey, if you are serious about trading, smash that like button and subscribe for more weekly Forex insight. Let's go. So, what's happening? The US just hit Canada and Mexico with new tariffs. For Canada, there is a 25% tariff on steel, which makes Canadian export more expensive. That weakens the CAD because fewer companies want to buy from Canada. And as you can see from the graph, Canada exports 78% of all its products to the US. That is a lot. That is quite a lot. And you can see Mexico as well exported 80% to the US out of all their export. They are heavily dependent on it. So for Mexico, the new auto industry tariff means production costs are rising. This puts pressure on the Mexican peso. And you can see it gets very interesting because the US dollar usually strengthens in times of economic uncertainty. And that's exactly what we are seeing. Let's dive deeper into what these tariffs are all about. US tariffs are essentially taxes imposed on imported goods, making foreign products more expensive for American consumers. This is usually done to protect domestic industries or as leverage in trade negotiations. In recent years, the US has targeted Canada and Mexico with tariffs on products like aluminum, steel, and even agricultural goods. The goal is to reduce trade deficits and protect American jobs. But it is not that simple. Now, how does this impact Forex trading? Tariffs can lead to increased costs for businesses, reduced demand for export, and overall economic shutdown. This in turn affects investors' confidence and currency valuations. For instance, when the US imposes tariffs on Canadian goods, it can weaken the Canadian dollar against the US dollar. The same goes for Mexico. Tariffs on Mexican exports can disrupt industries that rely heavily on US markets, impacting the Mexican peso and causing fluctuation in the USD MXN currency pair. So, understanding the rationale behind US tariff and the chain reaction they create is crucial for predicting Forex market movements. Now, let's see how the market reacted. Right after the news, we saw USD CAD spiked up from around 1.4370 to 1.4790. That's a huge jump when we hear about the tariff. Right. So since after the tariff, we have seen that all the gains that USD made against Canadian dollar has actually gone back. And we can now see that we are trading actually after a few days. We are looking at from 3rd of February up to today. We've seen that USD CAD has settled down in a narrow range. So range of 1.4270 to 1.4370. That's about 100 pips narrow range. Meanwhile, Mexican Pixel USD MXN shot up from 2050 to about 2130 after we've seen the tariff being announced against Mexico. Since then, we have seen that Mexican Pixel has actually gained back some of the lost territories, and we can see now that we are trading in a very narrow range of 2040 being the support created, and the current resistance level around 2070. So that's about 300 pips trading range. And guess what? This isn't the first time tariff caused a massive forex move. Back in 2018, when Trump introduced steel tariffs, we saw a similar reaction. Do you think USD will keep rising, or will Canadian dollar or Mexican Pixel recover? Drop your thoughts in the comments. Now, let's analyze the chart and see where the best trade setups are. For USD CAD, our key resistance is at 1.4370 and key support 1.4270. If we see a break above this resistance area, we are likely to see 1.4500 soon, and subsequently 1.4790. So that's the outlook for USD CAD. The support is at 1.420. If we break the support, we are likely going to see a decline on this currency pair. Also, indicators confirming strong momentum. You can see RSI is confirming overbought, getting close to the overbought, and the Bollinger Band is showing increasing in momentum. For USD MXN, our support level is at 20.40, 20.4000, and we can see our resistance area is at 20.70. So if the market pulls back to our previous support level, we might see a bounce back towards 2070 later on, and also we might see a real move upwards towards 2130, which was the height of the Trump announcement. The momentum indicator like RSI, if it shows overbought, it means there is a strong momentum breaking upward, and the Bollinger Band also have to show increasing in momentum. If those two criteria were to be present, and you see the break or the confirmation of this support level, that might be indication that we are going to move back up to 2070 or 2130. Will you buy or short this move, either on the USD CAD or USD MXN? Comment below with your analysis. All right, here is the strategy you need to trade this move successfully. If USD CAD breaks above 1.4370, look for a buy opportunities around 1.4370 and put a stop loss 70 pip below at 1.4300, around here. A stop loss around 1.4300, and first target is 1.45. First target 1.45 and second target is 1.47. So if you see a break above 1.4370, which is our current resistance area, you look for a buy opportunity targeting 145 and 147 eventually. Stop loss is going to be 70 pips below here, which is at 1.4300. If USD MXN pulls back to 2040, if it pulls back to the 2040 area and hold, enter a long trade targeting 2070 and subsequent target of 2100. The key here is to wait for confirmation. Wait for confirmation when you see this support level here hold. If we pull back to the support level and hold, that is when you're going to look for buying opportunity, enter a buy trade, and your stop loss will be 40 pips below. which will be at 2000, and your target will be initial 2070 and eventually around 2100. So that is the strategy for trading this USD MXN. Do you want me to cover more live trade setups? Let me know in the comment. Let's talk about risk management and cautions. Trading Forex pairs affected by tariffs like USD CAD and USD MXN can be highly volatile and unpredictable. That's why risk management is crucial. First, never risk more than you can afford to lose. Set a strict risk percentage per trade, usually between 1 to 2% of your trading account. Next, always use stop loss orders. This protects your capital from unexpected market swings caused by sudden tariff announcement or political events. Also, keep an eye on economic calendars. Important news like tariff updates or trade negotiation can trigger sharp currency movements. And remember, market sentiments can shift rapidly. So avoid over leveraging. High leverage might amplify gains, but it also magnifies losses. By practicing sound risk management and staying informed, you have navigated the volatility and make more calculated trading decisions. All right, traders, let's summarize. 1. US tariffs are shaking the market. USD is gaining strength. USD CAD and USD MXN, they are at key levels or approaching key levels. So there's a great trading opportunities ahead. What is my top strategy? Breakout on USD CAD or a pullback trade on USD MXN. So that is a top strategy. It's either you look for a breakout on USD CAD or a pullback trade on USD MXN. Now, I want to hear from you guys. I want to hear from you. Where do you think USD is headed next? Comment below, please. Comment below. And if you got value from this video, smash the like button and subscribe for more expert trading insight. See you in the next one.